AMD just reported record earnings, beating Wall Street expectations, yet the stock fell. This paradoxical reaction has left many investors and market watchers puzzled, especially given the company's strong performance in a competitive landscape. What's driving this bizarre reaction? Today, we dive deep into the numbers, the AI story, and the hidden expectations behind AMD's surprising stock drop. We will explore the factors that led to this outcome, including market sentiment, competitive pressures, and investor behavior. Advanced Micro Devices delivered one of its strongest quarters ever, showcasing robust growth across its segments. This performance underscores the company's strategic execution and its ability to capitalize on market opportunities, particularly in the high-growth areas of technology. Revenue hit an impressive $9.25 billion, marking a substantial 36% jump year-over-year. Furthermore, earnings per share came in at $1.20, comfortably beating analyst estimates and demonstrating strong profitability. These figures highlight AMD's financial strength and operational efficiency. Even more impressive, guidance for Q4 came in above expectations, projecting revenue to reach up to $9.9 billion. This optimistic forecast signals continued momentum and confidence from AMD's management regarding future performance, particularly in key growth areas. Clearly, business is booming, especially thanks to surging AI demand, which has become a significant growth driver for AMD. So, with such stellar results and a positive outlook, why is the stock down? This question puzzles many, given the strong underlying fundamentals. It all comes down to expectations. Investors have been bidding up AMD for months, fueled by intense AI optimism and significant big-name deals with industry giants like OpenAI and Oracle. This created a high bar for the company's performance, setting the stage for potential disappointment. So when AMD delivered solid results, Wall Street's response was a resounding, "Good, but not good enough." This sentiment reflects the market's insatiable appetite for groundbreaking news, especially from companies positioned in high-growth sectors like AI, where expectations often outpace reality. Even though guidance beat forecasts, the market was pricing in something massive: blockbuster AI orders, significant hyperscale traction, and a much faster push against Nvidia. These elevated expectations created a scenario where even excellent results could be perceived as falling short of the market's ambitious projections. But that didn't show up, at least not big enough to satisfy the market's lofty hopes. Meanwhile, Supermicro or SMCI, sank after weak guidance, pulling related AI hardware stocks lower and contributing to the broader negative sentiment affecting AMD. In short, high expectations, fueled by intense market speculation and AI hype, ultimately crushed what were otherwise very good results. This illustrates a common market phenomenon where investor sentiment can overshadow strong financial performance, especially in volatile sectors. The spotlight is intensely on the data center race, where AMD is aggressively trying to take market share from Nvidia's near monopoly. This battle for dominance in AI compute is a critical factor influencing investor perception and the future trajectory of both companies. AI demand is exploding, and AMD's MI300 series is indeed gaining real traction, demonstrating its competitive capabilities. But the catch? Analysts say adoption is still slower than hoped, indicating that while progress is being made, it's not at the accelerated pace the market had anticipated. The market expected AMD to announce bigger AI deployments and more hyperscale wins, signaling a rapid acceleration in its AI strategy. Instead, we saw strong progress, just not the kind that dominates headlines or dramatically shifts market perceptions overnight. This incremental growth, while positive, didn't meet the market's demand for explosive news. And because Nvidia is scaling so fast, setting an incredibly high bar for growth, AMD's progress, while good, looks less historic in comparison. Nvidia's rapid expansion in the AI sector makes AMD's significant achievements appear more modest, influencing investor sentiment and stock performance. Beyond AMD, the broader market environment is tense and uncertain. Investors are increasingly cautious as they digest a confluence of factors, including elevated AI stock valuations, ongoing government shutdown negotiations, and critical upcoming jobs numbers. These macro pressures create a challenging backdrop for even strong individual company performance. This puts significant pressure on high-growth names like AMD, making them particularly vulnerable to market jitters. So even though AMD is executing well and delivering solid results, the broader negative sentiment and macroeconomic uncertainties aren't helping its stock performance. When valuations are stretched, companies must deliver perfection to maintain investor confidence and justify their stock prices. AMD delivered excellence, showcasing strong operational performance and strategic execution, but it did not deliver the perfection that the market, with its elevated expectations, was demanding. So what does this all mean for AMD and its investors? Despite the short-term reaction and market volatility, the long-term story for the company remains fundamentally strong and compelling. This suggests that current dips might present opportunities for those with a longer investment horizon. This long-term strength is underpinned by several key factors: record revenue, consistently raised guidance, expanding AI partnerships that solidify its market position, and growing data center momentum. These elements collectively paint a picture of a company with robust foundational growth. AMD is strategically positioning itself as the only serious challenger to Nvidia in the high-end AI compute market. This competitive stance is crucial as the demand for advanced AI processing capabilities continues to surge, creating a significant battleground for market leadership. This sector, driven by the relentless innovation in AI, will be worth trillions over the coming decade, presenting an enormous opportunity. AMD is already on the field, actively participating and making significant strides, indicating its potential to capture a substantial share of this burgeoning market. Short-term volatility? That's expected in a rapidly evolving and highly speculative market like AI. However, the long-term opportunity for AMD remains incredibly compelling, driven by fundamental growth drivers and strategic positioning in a critical technological domain. AMD is executing powerfully, demonstrating strong operational capabilities and strategic vision. However, it's just not executing fast enough to satisfy a market hypersensitive to AI momentum, which demands immediate and explosive growth, often overlooking steady, sustainable progress. So, the critical question remains: is this a temporary dip, a mere blip in AMD's upward trajectory, or the start of something deeper, signaling a more fundamental shift in market perception? Let us know your take in the comments below. Like and subscribe for more in-depth analyses and deep dives into the fascinating world of AI and semiconductor technologies. Your engagement helps us continue to bring you valuable insights and market commentary.